Hello students, today we'll do the chapter Special Subsidiary Books. Now what is a subsidiary books? The subsidiary books is also known as books of original entry, just like journal entry. Now these books are opened when there are too many transactions. When the business expands, the number of transactions increases, and so when the journal becomes too lengthy and too bulky, so to reduce that hectic or tiresome work of the bookkeeper or the accountant, the subsidiary books, which are also known as sub-journals, are open. So the transactions relating to the same nature is been written down in one book. Like here in this question, we'll prepare the purchase book. So all the credit purchase will be recorded in the purchase book and in the date wise, what we call as chronological order. And from here the ledger posting can be done. The another advantage of this is there is no violation of double entry system, because here we have no debit or credit, and it is time saving. It saves man hour. It saves the hectic work of the accountant. It saves man hour because each department can have their own accountant recording various books. Now in this we simply write the details of the credit purchase. Since it is purchase book, so we'll write the details of the credit purchase, and then this will function like the journal, like a sub journal, because the entry is first done in these subsidiary books. In simple way, we can see that whenever the journal work becomes too lengthy, it has been divided into sub-journals where transactions of same nature is written down in the book to which it belongs. And from here, the ledger posting has been done. And so, this method of recording is called as the method of the recording here is called as the practical system of accounting, or sometimes the English system of recording. And here the rule of double entry system cannot be violated because there is no debit or credit. It is simply writing the details. So let us do the question. 2017. M.S. Ram Narayan and Sons of Kerala, who are dealer in ready-made garments, purchase the following. So here I made the format purchase book. So he is purchasing. So he is making the detail of from whom he has purchased. Date, name of supplier, because purchase will be done from the supplier, from customer. You cannot purchase from the supplier. Invoice number, LF, detail, purchase, because this is purchase book. Input CGST, input SGST, input IGST, because purchase we have to give GST. So input and total amount. Now let us start. Okay, so I'll write here date 2017. May 2nd. Purchase from Fashion House, Mumbai. Okay, so we'll write the detail. Fashion House, Mumbai, Maharashtra. Okay. So the first supplier is Fashion House, Mumbai, Maharashtra. Now we'll write down the detail. 100 shirts. We're writing this detail. 100 shirts at the rate rupees 1800 per shirt. Okay. So the details will write here. 100 into 1800 is 1,80,000. Next, 75 t-shirts. Okay, so we'll write here 75 t-shirts at the rate rupees 1600 per piece. Okay, so 75 into 1600 will be 1,20,000. Now next it says less trade discount, but before getting the trade discount we'll have to add this to this. So this is coming to 3 lakhs. Okay, so I'll put a line over here. Okay, now the trade discount. So now we'll do less. The trade discount here is 20%. Okay, so we'll write here 20%, 20% trade discount. Now this was the catalog price, so trade discount is given, so 20% will be 60,000. Okay, now we will minus this trade discount from 3 lakhs. So after minusing we are getting 2,40,000. So you can see here only the details are written. There is no debit or credit. The writing work is more over here, but there is no tension of remembering what to debit and what to credit. Then we have and freight charges payable 10,000. Now these freight charges will be recorded in the journal proper. And why will record in the journal proper? Because these are the transactions other than original purchase. Okay, in the older method we used to add, but in the new method what we will do, we'll write this in journal proper. Now here in the last part you can see it is written here purchase book assuming CGST 9% and SGST 9%. Okay, now this MS Narayan is from Kerala and he is from Fashion House Mumbai, Maharashtra. This is interstate, so we will charge IGST. So IGST will be 9% plus 9%, 18%. So we'll write here add 18% IGST. So 18% of 2,40,000 is 43,200. Okay, now we'll add this with GST. So after adding this with this, it is coming to 2,83,200. Okay, so here the first detail was of Fashion House Mumbai, the name of the supplier. Details, we deducted the trade discount because GST is been paid on the purchase price. Now we'll write down the detail. The purchase was 2,40,000. Why 2,40,000? Because we're getting the trade discount. MS Narayan gets the trade discount, and after trade discount he purchases it for 2,40,000. There is no CGST, no SGST. We have IGST 43,200, and then we'll write the total amount 2,83,200. So the same detail comes here. Purchase, GST, total. Okay. Then next we have is May 10. May 10. May 10 Apollo Garments. Okay. The detail is Apollo Garments. So we'll write here Apollo. Okay, we have double P here. Apollo Garments. Okay. And he is from Kerala. We'll write down the detail. The first one is 65 shirts at the rate rupees 2000 per piece. Next detail we have is 80 T-shirts at the rate rupees 1500 per piece. Okay, so we'll write down here 60 into 2000 is 1,30,000, and this is 80 into 1500 is 1,20,000. We'll add this to, so this is coming to 2,50,000. Okay, 2,50,000. Now we'll go with the same process. Trade discount is 20%. Okay, so from here we'll do less 20% trade discount. So 20% of this is 50,000. So after minusing 50,000, okay, we will get here 2 lakh. Then GST. Now this is intra-state, same state. So we will have CGST and SGST because Kerala and Kerala. So we'll write here add 9% CGST, add 9% SGST. So here 9% of this is 18,000, 9% of 2 lakh, and 9% of 2 lakh again is 18,000. Okay. So, okay. So now we'll add these three. So when we add these three, we get 2,36,000. Okay. So here it is coming to 2,36,000. So we'll write down the same process. 2 lakh is the purchase. 2 lakh is purchase. There is CGST, which is 18,000. Then we have SGST, which is 18,000. And there is no IGST. And the total is coming to 2,36,000. Now we'll total. Okay. So the total here is 4,40,000. The total here is 18,000. The total here is again 18,000. The total is 43,200. And the total here is 5,19,200. Okay. So this is how we have to make it. Okay. So here we have made the purchase book of MS Narayan and Sons, and here is the detail of the name of the supplier from whom he has purchased the garments, details of the cost after deducting the trade discount and adding the GST, then separate detail of purchase, input because this is purchase, input SGST, input CGST, input IGST and total amount, and then finally we have total here. Now for the freights payable. Now the freight is charged to the customer along with the goods. Now since this is a credit record, so the freight charges will also be charged on credit. So freight inwards debit 10,000, input IGST. This fashion house is from Mumbai and the MS Narayan is from Kerala. So since this is expense, so we write down input IGST to fashion house. So freight is 10,000, 18% is 1800 and 11,800 to fashion house. They are getting credited because they are charging it along with the goods to MS Narayan of Kerala. Then we have May 10. Freight charges rupees 2,000. So here freight inwards 2,000. Now this is intra-state, same state, Kerala and Kerala. So the purchase book here we are making, so we'll write input. Input CGST 180, input SGST 180, Apollo Garments 2,360. Okay. Freight charges on intra-state purchase of goods 9% CGST and 9% SGST. So we made the record of the freight in the journal proper. Okay. So in the purchase book, the format is date, name of supplier, invoice number, that is white number we write down LF, details purchase, input CGST, input SGST, input IGST and total amount. So the purchase book is a sub-journal or subsidiary books which functions as a books of original entry, and from here the journal posting can be done, and there is no violation of any double entry system because there is no trouble of debiting or crediting any account.